Hi, this is Michael Adams for CEORoaster and Stock Telegraph, and it's my great pleasure to have a very interesting company as a guest, represented by Dr. Florian Spiegl. He's actually from Austria, or born in Austria, now living in Hong Kong, and he's representing Hunter Technologies. That's a really interesting deal. It's a combination of, let's say, the old-fashioned oil market combined with blockchain, and I think that's something where we really need to get more information about. And the company is trading on the TSX Venture as HOC, on the OTCQB as HOILF, and on the Frankfurt market as RWPM. But I will put all the symbols somewhere around this video. And for my German fellows, the WKN number is A2QEY. So my pleasure, Florian, to welcome here on stage, I would almost say. Yeah, maybe to
Thank
start
you very
off,
much, Michael.
Yeah, maybe to start off, give us a little bit of background about yourself.
Sure. Well, I've spent most of my career in financial services, in asset management and trading, and in fintech. I first worked as a strategy consultant, advising large financial organizations, and later in asset management and wealth management with Credit Suisse. And then I started my own fintech company, specializing on technology that digitalizes end-to-end trading processes. And now eventually with Hunter, we are using this technology to digitalize the transaction processes in commodities, and specifically in our case, in physical oil trading. And so for me, it brings together, as you said, this more traditional side, the more traditional markets, and the digital elements, and merging that and bringing that to the next level, really, of efficiency, of profitability, and of connectivity between trade partners.
Okay. No, great. And yeah, so for the oil, because blockchain as an industry right now is really, really hot, while the oil industry right now is, at least some people think, that next year we don't need any oil any longer, right? The whole world is out of oil and everybody's just green, which I don't feel like. Yeah, there will be like decades until maybe the world can cut off the oil demand, but I think we're going to dig into that. Let me bring up the presentation so you can run us through the story. Can you see everything?
Yes.
Okay, cool. Yeah, go ahead.
So yes, that works fine. So before we get into that, I actually want to come back to the point that you just made,
sure.
because it's a really important one, and I can absolutely relate to it. I had a similar perspective when I first looked into the oil industry, and with everything now going into sustainability, and we have to get out of our fossil fuels. It's important to, at the very beginning, to look into this industry and realize one thing that you already said: we will use oil as a very effective energy source for our economies for decades to come, as we transition out of carbohydrates as a fossil source of energy. That's number one. So it's still here for a while to come, and we need to make sure that while it's still here for decades to come, with technology, we help make it more sustainable. We help the industry to be responsible also in terms of climate action. And we can get into that later, how digitalization helps here. The second element, which I think is just as important, it's not just about oil as an energy source, but also, for example, as a source for material, as a source for a lot of things that are around us. Right. So when people say, yes, we should get out of oil, then I say, well, so you get rid of most of the things around you as you're saying it. And the point here is also, as we get into more sustainable setup, basically, of our economies, oil plays a very important role here in material science and other areas, and will continue to do that. So it's even more important that we help with making the supply chains more efficient, making them cleaner, because as a resource, it will continue to play a really, really important role.
Okay, great. Yeah, and maybe you can describe a little bit how the oil market right now works, because if you're kind of not an insider in the oil market, you think about Royal Dutch Shell, or you should think about Exxon or British Petroleum, and you think they are doing everything on their own. Like they have their oil fields somewhere in the world, they have their own pipelines, they have their own refinery, they have their own gas stations. But in real life, it's different, right? So there's various players like mid-tier, and then you have these pipeline guys, and so everything is kind of mixed, right? So it's not that one big company has everything under control, right?
Yeah, absolutely right. And you could look at the structure of the industry from two angles. One is the value chain that we're looking at, where we say from upstream to downstream. So upstream is literally getting the oil out of the ground, so exploration and production. And then you have a value chain of production, of refining, of logistics in between, of distribution, and then all the way downstream to the actual usage. And there's many different ways oil is used and important for our economies. So what we focus on is the production side of things. And there is different players, as you pointed out. There's integrated players who basically cover all the way from upstream to downstream.
Oh, okay.
And there is so-called independent producers. So these are companies who are very focused on just the production of oil, essentially exploring and producing it and then selling it into the market further downstream.
Okay.
So we are very, very focused on the independent producers, and specifically on the smaller independent producers. Because one topic that we're working with is, and that's maybe a good way to jump to what we're seeing in the market, is specifically for the small producers, the way that they market their product, the way that they sell their product, it has not arrived yet in the digital age. It is to a high degree offline or on paper contracts, or with calling each other or emailing each other, where in other industries, we've seen a complete digitalization of all of that. And so the opportunity that we see is that inevitably, of course, it will also happen to this space, and we can be part of that change because there's real challenges around doing it in a non-digital way. And as you can see here, is one is inefficiency, as I just mentioned. You're using many different systems. Documentation is a lot of work. When you need to report something to regulators and others, it's administrative overhead, essentially. And second, if I'm a small producer, a small independent producer, I do have a limited choice of transaction partners today, because in a way, I just don't have the size for me to be interesting to more buyers, because it's costly for them to deal with me one-on-one with all these small counterparties. And so only a fraction of the market is really visible. As you can imagine, if it's not somewhere digital, I call 10 people and then I start to get a picture of the market, but that is actually a lot of work. So it's only a fragmented view that we have of the market today. And each transaction in the end is a one-on-one relationship, right? So what you can do when you say, okay, we're building a digital marketplace where the buyer and the seller, so the producer and the purchaser in our case, can find each other. They can register, they have a profile. The producer can share what they are looking to sell. A purchaser could post, this is what I'm looking to buy. And then they can find each other on this platform. So really in a strategic way, find each other, because it's a more complete picture of the market. And then go through a very efficient way of negotiating, of signing a digital contract, and eventually also settling the trade with payment and confirming that the goods were received. It's a completely different way of going through this process from how it's working today, and where these challenges that I just mentioned are very much part still of the game, specifically for the smaller producers.
Okay, and as I can imagine, the oil market is international, so you also have, if the payments are done in fiat currency, you also have these different currencies juggling around. So wouldn't it be a smart idea to initiate the payments in crypto instead of crypto coins instead of fiat currency?
Yeah, so I know you have a keen interest in the blockchain space, and we share that. And as a company, and me personally, we've been in this for years. 5, 6 years ago, it was a non-topic, and institutions were not interested in it. And I think it's now reaching a level of maturity where indeed we can think about this very interesting new models. And again, where we bring together a large traditionally working industry with the innovation that we see coming out of fundamentally blockchain technology. So back to your question, yes, of course. The first step is to bring the whole process on a digital level.
Sure.
And then you can slot in many, many more efficiencies, and payment is one of them. And that can be a traditional FX transaction with traditional fiat currencies. But of course, for some countries, it may be easier for them, or more viable, or more desired for the producer to use, for example, a stable coin. Which is not Bitcoin, which may have too much volatility to be a good
tether or something.
Exactly. Could be tether to the US dollar, where I would have real-time settlement. I would go straight into my wallet. So these things are really emerging now and entering the mainstream, you could almost say. And again, by having everything on a digital level, it opens up the opportunity to just keep innovating and say, okay, let's look at payments. How can we fix this? How can we make it more effective for both sides? And of course, for a platform play like Oilx, which is our flagship product in this context, it allows us to continue to build out products that add value and that help us generate revenue eventually.
Okay, cool. Yeah, please go ahead.
Good. So, what we are presenting really is a solution to these challenges we just discussed. And as a summary, what the product Oilx is really creating this accessible, efficient, and transparent digital platform that combines a marketplace that I just described, but also the transparency of tracking the supply chain, of how this asset moves through the supply chain, and really truly unlock value by digitalizing this entire industry. So this is what we are looking at as a solution for the challenges that we just discussed. And the way we solve it is this Oilx platform. And it's a digital marketplace for physical oil transactions. It's as simple as that. And the value chain that I laid out earlier is starting with deal discovery. So essentially, I'm finding my counterparty. I'm finding someone I'm interested to do business with. It starts with that. Because today, if you're a broker, for example, you just pick up the phone all the time. It's not really scalable. It is a lot of work to find good deals and to be in the middle and to connect the two parties. So discoverability on a marketplace, in our case, using a map, is a much more effective way, because I can look at the map and say, well, I'm interested in a specific region. You can filter for specific qualities of the product. For example, different types of oil, different qualities of oil, certain prices. I can filter for certain gathering points. So, where the oil is actually being delivered to. And so it allows me to really strategically look at the market. And the map is perfect for that. So we take this kind of data and visualize it. And that allows the producers and the purchasers to connect much quicker and more efficiently.
Actually, that reminds me, when I try to book a hotel room somewhere, let's say on the island of Ibiza, and I go to hotels.com or booking.com, and then I can say, okay, I want to go to Ibiza, and then scroll in, and then I see all these hotels popping up. They're either red when they're fully booked, or they're green, and then I can also filter by, let's say, the ratings and the price, and so that's kind of comparable. So it's an easy interface for the user, because I feel that if an oil driller has to dig into blockchain like deeply, that won't work. So the blockchain is kind of the underlying foundation, making everything work, but the front end is easy to use as booking a hotel room, kind of.
It's a great analogy, Michael. And your blockchain as a technology, like any technology, is neutral, right? It depends on what you use it for and the value you create in the application that you build on top of it. And the analogy here is, in the past, you would have had to call up all these hotels and discuss with them, well, what are you offering? Do you have a gym? All these things. So imagine you call 20 hotels to find the right one. And on a hotel booking platform, it's all visual, and you find the right hotel for you in no time, because you have a visual overview and you have filters. It's exactly the same with the marketplace function that we have. And it's going to change the way that counterparties find each other, exactly like you described. It's going to be a step change of difference. And in our view, that will just lead to more transactions, more activity that can then also be, that can run over our platform. But overall, as an industry, it's just easier for the producers to sell their product, and for the purchasers to find the right deal for them. And that's what marketplace is all about, connecting the two parties for good deals.
Okay, cool.
So of course, then the next step, once we find each other, is to negotiate, because I may put a price, but maybe you want to negotiate with me on the price, or maybe there's other elements of our deal that we want to discuss. And again, we're looking at other industries, or we take our experience in the financial services world, the kinds of platforms that my team and I in our fintech past built for trading companies, for example. And we built a very similar function for this market, where essentially I can communicate with a buyer or with the seller in a secure private chat that's native to the platform, where we can have a conversation, but it's with a full audit trail, and it is semi-structured, which means we can't just enter, well, that's the price after our discussion, that's the amount after our discussion. We both click accept, and that automatically generates a contract that reflects all of these facts. So it is a very effective way of negotiating. So having a conversation, and a hybrid of being very structured. And we take this concept from OTC trading of currencies, where again, in the past, the banks used to call each other up and say, I need $50 million Swiss francs. And today, mostly it's chat functions where they talk to each other. So we bring the best practice from financial markets into this industry, again, knowing that, of course, eventually all of that will go digital, and we have a good idea what the best approach is to solve that problem of negotiation. And this is a big part of the marketplace to do that. Then something that we're still developing is, in the end, if you have everybody on the platform, or a sufficiently large group of producers and purchasers on the platform, you can automate a lot of things. Imagine I'm a purchaser and I have an offtake need of, let's say, 15,000 barrels a day. And so ordinarily I would have to reach out to a lot of smaller producers if I want to buy from them. So what we can do on our platform is basically place a ticket and say, I'm looking for 15,000 barrels a day. These are the requirements I have on quality and on other things. This is the price bandwidth, or the fixed price that I'm looking for. And then I can basically let the producers fill my ticket, 1,500 barrels here, 5,000 barrels there, until the ticket is filled. So in a way, it's a smart matching algorithm that allows the market to operate to some extent on autopilot. And this is really the future that we see, and that we are already seeing in other markets. It just has not arrived yet in the physical oil markets. Again, using best practice technology and algorithms, we're building solutions that really add value and create more deals, essentially, for the counterparties.
But that's really interesting, because if you're a small producer, and there are like really small producers out there with like 20 barrels a day or something like that, right? And so they are not interested to any bigger buyer, because he says like, that's only a small fraction of what I need. So what you do kind of is, and that's again kind of borrowed from another industry, is it's like crowdfunding, right? You have someone looking for the oil, and then you have all these small pieces as a contribution.
Yes, it's cool. So in the finance world, we would call it an aggregation, right? We aggregate many small participants, as long as they have the same kind of product that I'm looking for. And that happened in the past too, of course, but it was highly manual. I had to talk to each of them separately. So if you have a system that operates natively on a digital level using blockchain in our case, then it gets relatively easy to aggregate even large volumes. And a typical small producer, they wouldn't be at 20 barrels. They would be at least at a few hundred barrels a day. The target group that we're looking at, just to maybe mention that as well, is the smallest group of independent producers. We really want to start with the smallest ones because there's a lot to catch up, we believe, for that group. And the opportunity in the market, for the reasons we just discussed, is most significant. So that smallest group is actually defined to produce less than 20,000 barrels a day. With that, you are a so-called small and private producer. So one reason why I'm very excited about this is also because we're covering an industry that is really, really interesting in terms of its size and in terms of its dynamics. So even the smallest ones, on average in that group, we're talking around 3,000 barrels of oil a day, and you can do the do the math times 60 of oil price. That's the daily revenue that the small guys are producing. And so if you can run that over a platform by adding real value to them as a business model, it's a very interesting play because the digital approach of a marketplace leads to efficiencies for all sides, and some of that stays with the platform. That's where the principle of the business model comes from. But it all starts with the small producers.
Yeah, that would be my next question. So your revenue stream, or your revenue, like for Hunter, is coming from a percentage of the traded oil volume, or is there a membership fee, or how does that work?
So you have two sides involved, right? So you have the producers, and typically if a producer works with a broker who connects them manually today to a buyer, that broker would take a cut, a commission fee essentially. And so our platform works in a similar way, but because we can digitalize all of that and it's a bit more efficient for us to do that, we will aim below the typical brokerage fee. So you can think about, a percentage, a 1% figure on the overall volume transacted. And the trick here is, because I present you to more buyers, hopefully you're able to secure a little bit of a better price as a producer. And so almost the platform pays for itself because we allow you to sell in a more efficient, at a better price. And so it's always a no-brainer to use it. That's what we're aiming for. These are some of the things that we have to prove out, of course, but we have seen these things in other marketplaces where they work wonderfully. Everybody wins in the end. And what needs to happen is this change to follow this whole process in a digital manner and move out of the inefficient offline way of doing it. Then, of course, to complete the picture, you have the second side, you have the buyer. And to the buyer, it's more of a tool because it makes that process for me more efficient. I can place a ticket. I don't have to call everybody. The system takes care of it. Everything is neatly documented. There's a nice audit trail that I can use to produce a report that I can file with my internal departments or even externally to the regulator. So it lowers my cost of doing business. And in a way, it's a software as a service tool for the purchases, and the charges accordingly as a subscription to this software. And so we are combining, in terms of business model, the variable revenue from growing volumes that flow over the platform with the more stable recurring revenue of a software model. And with that, we balance out our revenue streams as we go through cycles of oil prices, of economic situation. And that's the unique situation of serving both the supply side and the demand side, that you can really tailor the fee model to each side.
Okay. Of course, the blockchain is scalable, but what is your, because you just had some announcement that you're starting the first internal tests, right? So what is the number of, let's say, buyers and sellers that need to be registered on the platform so that you really can start in real world? Is there like a number, and how are you going to get those guys? Because as you said, right, there are all these small producers, and you probably have to reach out to them on the phone again, right, or however you do it, on email, at least one-on-one, right, to get to a number of sellers. Because for every buyer, if there's no seller, or not enough sellers, it's not really interesting to go be on the platform. So both sides have to grow. So what is your, let's say, user acquisition strategy?
So, and that's a very important point. And any digital marketplace has this situation where once you get to the minimum threshold of usage, it's fantastic, like I just described. But it's hard to get there. So we're very focused on the first transaction on the platform, with the first few transactions on the platform, that will prove this model and that we show that value is added to both sides. And the roadmap for that is, maybe to touch that quickly, yesterday we went live with a private minimum viable product of this platform, as I described earlier. And by mid-year, so we have another 3 months of bringing the platform functionality to the level that is required to add this kind of value to both parties. And mid-year, we're going to do the first transaction. And
that's fast. Okay.
There's so as a technical development team, I think the beauty of it is that we came as an already coherent team. We work together very well. Everybody knows each other very well. So in terms of delivery speed and time to market, I think we're doing quite well. But of course, to the point that you made earlier, it's all about connecting to the industry, connecting to the users. And we're very research driven. So we're really sitting down with them. We're having structured interviews, having conversations. And these are questions like, describe to me how you are selling your product today. And then tell me what is difficult about that. It's not saying, oh, would you like this? Would you like that? We first try to learn really in detail, what do you do today and what is hard about it? Because then we can go back to the drawing board and design business requirements that solve these problems. So it's first about understanding the client. But as you connect to the client and the users, you are building a network. So the idea here is to, when we're ready mid-year, we already have a sizable network of people who are seriously excited about it. And I tell you, the people we talk to, they are seriously excited about it. They can't wait for us to go live and use it. So we'll have basically a contact list of people where we say, we're ready for the private beta, the mid-year private beta. So it won't be public yet, but a group of people on the producer side, and a group of people, or maybe even just one purchaser, and that would be our first transaction. And then what you do is you prove the concept, and then it's about scaling, right? So if you did it right, technology-wise, your platform can handle basically any amount of volume. That's what we're working on very hard to get that right. So it's a business challenge to then scale and bring more users on the platform. And the way we're doing that is, as you said, you have to connect with the community. You have to work with outbound sales that actively reaches out, that shows people the opportunity to test ride the platform. And our conviction is, once you've done it this way, you will never look back, because it will be so much easier than what you do today. It will feel like, I miss this easy way of doing things. And this is, again, the benefit of digital platforms. It's a step change in terms of not even just efficiency and what you can get out of it, but also, let's say, the joy of using it, a great user experience. People don't want to stop using it. And this is why we invest a lot of time now. And this is why it takes us 6 months. It's fast, yes, but still it's quite some time. But it takes us 6 months to get to the point where we are happy with the product. And we say, yes, it holds this potential to really get people excited and use it. And then, it's all about scaling, reaching out to people and getting more users.
Yeah, and let me ask you a question, because I think that you need to try to get as much people committed to the platform as fast as possible, so that you have a real size in the market, because there's always competition around. So what are the barriers to entry for, let's say, I'm not sure if they have an interest, but let's say for Royal Dutch Shell to create such a platform, or for someone like IBM or whoever, I don't know who the players are, right? But one of the big guys with like billions of market cap, they can just waste $1 billion to come up with kind of a similar technology platform. So the only thing to differentiate yourself long term is the user base, not the technology itself, right? Because that can be rebuilt.
That's correct. Yeah, and technology itself is, let's say, rarely a good way of defending against competition, because in today's world, a lot of it is accessible, especially with blockchain. The fundamental protocols are open source, so it's not a good defense mechanism. I think some of where the challenges for us and where we work very hard and where we're very focused on will create that defensibility of the model, and that is we are combining the deep understanding of a very traditional industry and the very specific ways it works in our company, and the people we have in the company, and the history our company has in this traditional world, and the people we have on the board, for example, in this traditional world, with the fintech side of things, the company FinFabric that came on board with a very financial way of thinking about these problems, a very tech-driven way of thinking about these problems. And it's very hard to bring together these two sides. First of all, get the people, and then second, making them work together in a way that's effective, that really delivers a product in a reasonable amount of time. So if you say, and we don't have to name any names, but if a large company were to say, I just take a lot of money and throw that at the problem, so to speak, it would take them a long, long time to build anything that has value. And I've been there. I did these things in large banks, right? I ran these large projects with a lot of budget where it doesn't scale linearly. You know, you put in more money, you don't twice the money, you don't move twice as fast, or your outcome is not twice as good. The curve starts to flatten very quickly for large organizations. So we are in a unique position to be a speedboat in terms of our agility and our flexibility and our way to connect, and combine that with the foundational stability of a listed company. I think it's quite unique, and that's the strength that we're using. But that's also something that we work on very hard, make these two sides work together very effectively. And then it's all about continuing to innovate, because you know, we are the first innovators of this kind in this specific market, and then there are others who will come to it. There's no doubt about it. There's always competition. And so the best way to protect from that is not necessarily patents and all those things, because you can always work around it, is continue to innovate, continue to add value, and show that you're a good partner to those parties in the industry, and always be that step ahead. That's the strategy.
Yeah, because my feeling is there's only one platform that is going to succeed. It's kind of like, if you think about auction, it's eBay. Yeah, at the beginning of the internet thing, yeah, there was like 20, 50 auction platforms. Yeah, kind of the same with now with these food delivery services, right? There was like a bunch of them, and now everything is kind of consolidating, and that's in most of these industries, because, as you said, everything is like technology, and it's all about the user base. Like if all your friends are using WhatsApp, yeah, you have to use WhatsApp, right? So kind of thing.
Yeah,
anyway.
That's right.
Okay,
that's right. And that, in a way, just quickly, I think that leads us to also who we are connecting. You know, we spoke about some of these parties, so it's worth spending a minute or so on that. So you have the independent producers, you have the buyers we mentioned, you have the traders or brokers in between. And so the point that you just made is also a good one, because it's bringing these parties together in something like a standard. And my take is there may not be a global standard in a globally dominating company. That is very hard to achieve. But you will have regional standards or standards in certain verticals. And our vertical is, you know, the independent producers, specifically the smaller ones, and then potentially the international connection that you mentioned earlier, where today they go through many stations also in terms of the transaction itself. In the future, because it's digital, we can more directly connect the international purchaser and the local producer, for example, in Texas, and provide it a global market for both sides. And you know, in that specific definition of the market, which is quite sizable, right? The smallest group of independent producers that I mentioned earlier, they're turning over $60 billion in revenue every year. So even that specific small segment is very attractive in terms of market size, and then you could work your way up to larger players. But I think there is room for more players. For us, it's about being very focused on that segment that we're serving.
Okay, cool.
You had a question. I think I interrupted you earlier, Michael.
No, and even if I don't remember it, so just go ahead. All good.
Good. So maybe another thing to look at is the technology side of it, because I remember that first of all you mentioned that earlier, and we spoke a bit about, well, what is blockchain really do for this? It's a question that people have today, again saying, well, is it just a gimmick because it's kind of a hot topic right now, or does it really do anything? Has it a real purpose? And I want to spend some time on that point as well, because in our case, you know, again, we've worked with blockchain for years, more than 5 years, and we see a real use case here. And that's the right-hand side here. One element here is the asset itself, so the resource itself that is represented as a contract, right? And the contract writes down all the rights that the two sides have in this transaction. And blockchain is perfect for creating a digital but legally enforceable version of this contract. And that is a key part of that digital value chain that I mentioned earlier. And the second thing is blockchain is very suitable to prove the truth of what actually happened, and to record an audit trail that is immutable. And that's just a transaction. So it's a great use case for that. But what we're looking for as well is, and it ties a little bit back to what we spoke about in the very beginning, well, how does this all help the industry to be responsible and to protect the environment? And if people don't know it yet, I'm going to share it here. Literally everyone we speak to, the producers in the industry, they have that interest. We all share that interest, and they want to produce, and they do produce in a responsible way. But for them, there will be challenges, for example, around proving what they do, how they optimize the production of the oil. And blockchain is a great way of recording this kind of information and then making that shareable, you know, reporting that fact again to regulators, where we have the immutable proof of that is hugely valuable. And it's one of the things that, you know, we can show throughout this entire value chain, the stops that the product went through, what the carbon impact is, for example, and how that can be tackled. Because, you know, there will be a future where maybe carbon offset comes in to help alleviate some of that that carbon emission that inevitably comes out of this industry. But for that, you need reliable data, and blockchain is suitable to store that data in a reliable way that can be trusted by trade partners, by authorities, and also internally for me to analyze my own business. And this is the third area where blockchain on our platform plays a really, really important role.
Okay.
Good. Maybe let's look at the roadmap. I mentioned some of it earlier, a few slides down, but what we're looking at from this first two steps, so Q2, Q3, the pilot, deliver, and the go live. If you look at the go live, what we're going to get out of that is the live first transaction and a tracking essentially across that value chain, proving the concept. And then with 2022, so through optimization in Q4 of this year, it's all about scaling, its expansion to new markets, getting more of these parties on the platform. So it's a very clear roadmap that is right now very much driven by the technical development of the platform. And then I would say as we get into Q3, Q4 is going to shift to be a lot more business driven, where we will be all about bringing the parties to the platform, seeing and understanding even better how we can add value. So in a simple way, you could look at it in these two halves, where the first half of this year is all about the tech side. The second half will be much more bringing it to market, getting traction and scaling.
Okay.
Good. On the team, yes, I mentioned that we have essentially as principals on our team veterans in the oil and gas industry or from the capital market space, and then combine that with enterprise software, with software sales as well, with trading systems, blockchain development I mentioned, and really solving this in the beginning, this chicken and egg problem, do you first have supply or you first have demand? Does the buyer come because there's a lot of good sellers, or do the sellers come because they think there's great buyers on the platform? Yeah. It's always the same challenge of a digital marketplace. We have done this before. We have solved this problem before with other assets. So this is another expertise that we bring to this industry. Again, to your question, how do you get the first traction on the platform? It's going to be hugely important. And we know the strategies and how to approach that. So I think we're combining that in a pretty rounded kind of team and setup. And then, yes, we have a deep bench. These are just the leading heads on the tech side, from just enterprise software, having worked in the large banks. Deutsche Bank is on there as well, Goldman and other places, to all sorts of tech companies. Again, it's quite a unique combination of industry expertise and tech expertise that we have on the team. Okay, cool. And that's it.
Yeah. So I think that was a very, very good in-depth look, at least, especially because that was our first video interview. And I'm pretty sure that we are moving forward, especially when there's more development within the company, we will just hook up again. Yeah. And then you guys can give my audience an update.
Yeah,
I don't.
That would be a lot to talk about, actually.
Yeah, no, that's good, right? And I don't have too many questions left, but I have something like a running gag. Just give me a second.
Sure.
So take a look into this and tell me where you see the company in, let's say, 5 years from now. And the second question would be, when you took over the whole oil market, right? There are some other industries, let's say other commodities, yeah, that could have or can be brought to the same or similar platform. So maybe you change oil exchange to commodity exchange. So take a look into the platform. Give me into the crystal ball and give me an outlook.
Definitely. So in 5 years' time, we will certainly dominate some of these verticals that I described earlier, very focused on the small producers in the physical oil trading space, and we'll transact billions over the platform. I have absolutely no doubt about it. It's about the scalability of what we're building and what the market naturally will go to, right? So it's very clear to me. It's all about executing across those 5 years. The opportunities are tremendous. On the second question, yes, absolutely. I think, first of all, we will connect much more internationally. We come out of this phase where, we do see the world forming a bit of camps, but in terms of economics and in terms of a trade, we'll still be super connected, especially around resources like oil. And so in 5 years' time, all of that will be traded in some way or another, electronically and digitally. And because we're early into this now, we'll be a leading company in that space. Of course, maybe in 5 years' time is a little bit too early. But if you look at other commodities that have a similar structure and, economically speaking, a long tail of many, many small producers, for example, in agricultural goods, you can apply the exact same principle, because those spaces have the exact same challenges that we ran through earlier, and we can solve them in a very similar way, like we're solving them for oil. For now, though, we are 100% focused on the physical oil trading space. Of course, knowing that if we get this one right, we can keep going, and there's a lot of opportunity ahead to expand.
Great. So I think that was great final words. So I'm always having the last word. I don't know why. So thank you very much. And
thank you.
Yeah, again, I will keep my subscribe to my channels on social media. I will keep you updated on the developments. Of course, follow Hunter on the website. It's huntertechnology.com. I don't know. Do you have like a shareholders letter where people can subscribe on your website too, or?
Yes. Yeah, yes, please subscribe on the website, where we update on product, where we will be starting to share some sneak peeks on how we're progressing. That goes back to, let's say, popular demand also from the network that we're building now, to be a bit more plugged in on how we are progressing, and that's what we're going to do, both via subscription, but then also we will start sharing more on LinkedIn, for example, to really connect with people who are interested and potential clients and users. Yeah.
Okay, that's it. Thank you very much, Florian. Take care. Bye-bye.
Thank you, Michael. Bye-bye.